There are some days in the market where the market hasn't picked a clear direction, but you'll spend time trading low probability setups only for the market to pick a direction after you're done trading or after you've lost a lot of money for the day, and you're left wondering, why did I take all these trades? I should have waited. In this video, I'm going to be sharing a simple 3-step high probability system that you can trade every single day and increase your chances of being profitable.
First things first, I'm going to go over why you should use this strategy. Number one, it is very simple and beginner friendly. And number two, it is repeatable. With any trading strategy that you learn, you want to ensure you're able to repeat it multiple times, because with repetition becomes mastery. Then you're able to identify when it works, how to even improve it, and increase your win rate. Number three is the most important. It can help you stay out of choppy conditions, and then you can catch the real moves in the market. Choppy conditions, I mean when the market hasn't picked a clear direction yet at the open, and we're just waiting for the market to form a clear trend, such as when you have higher lows and higher highs in an uptrend, or lower lows and lower highs in a downtrend. So I'm just going to be showing this strategy in simple steps so you can see how it's executed, and you can also practice it and implement it in your own trading. Step number one, you want to wait for the first 15 minutes to play out. I trade the New York session. So what I typically do is to wait for the first 15-minute candle to form and close, and then I mark the 15-minute low and the 15-minute high. If it has wicks, yes, you mark the wicks like I have done here in this example. I mark the low. Number two, you want to then go down to the 5-minute time frame and wait for direction. As shown here, you can see that the first 5-minute candle formed right here. This is the first 5-minute candle, and then a second one formed, but sellers weren't able to continue the trend cleanly, right? You won't have been able to catch a clean move if you decided to even take the 5-minute retest, because you would have not gotten enough downside move and you would have gotten stopped out on that trade. So by the time the third candle, which is the 15-minute candle that you were waiting for to form, you would see that buyers stepped up and closed this candle at the highs, and it shows strong buying pressure because this one candle that is green here engulfed these two candles. So now you then wait for direction. You're still on the 5-minute time frame, and you wait for the next 5-minute candle to form to see if it breaks above the 15-minute candle high with a strong candle. You don't want anything that looks like this with like a long wick or something like this. No, you want a strong move away from the level. Okay, now that you've done that, you're waiting. You're seeing that that candle has closed. The 5-minute candle closed strong. For an entry, you go down to the 1-minute time frame. These 5 candles show the candles that broke out of the 15-minute range. You're waiting for entry. You're not just jumping into the trade, because your risk to reward will be skewed and you can be prone to fake outs. Because like I said, if you just jump in without that candle closing, what could happen is just straight reversal down, and then you lose money. So you want to wait for a pullback to retest this 15-minute candle high, not 5-minute. 15-minute, you want to wait for the pullback to retest this 15-minute candle high. As you wait for the retest of the 15-minute candle high, you see price develops like this. Your entry, you're just studying what happens at this level. You don't really care what happens here in the middle. You're studying what happens around this 15-minute candle high. What happens? So sellers are trying to push the price, but they don't succeed. They don't succeed in pushing price down to break below the 15-minute high. And then a buyer steps in, or buyers step in and form a strong candle that engulfs this candle, right? So this is your signal bar, and this is your confirmation that buyers are stepping in. and then you can enter the trade here, and your profit target will be this high. So this will be a 1 to 2 hour trade, or 1 to 1.5, 1 to 2 hour, or 1 to 1.5 hour trade, where this is your risk. You're risking $100 to make 200, or $100 to make 150. That's what that means. Just because I'm generous, I'm going to show you another type of entry or candle formation that you can watch out for. You can watch out for a scenario where, yes, sellers manage to push price down, but buyers step in quickly and close the candle above the 15-minute high. And then this will be your signal bar letting you know, okay, watch out, buyers might step in. The next candle forms, and you see not only does it engulf the previous candle, it closes above this candle's open price. And then you can look to take an entry once this candle opens up. And then you can target the high, like I said, this previous high, as your profit taking level. And then this would be your risk. So you basically risked $100, for example. You risked $100 to maybe make $200, or you risk $100 to make 150. Now, this might just look simple, clear, and you're wondering, okay, but what if it fails? What do I do? So if the move fails while you are waiting for direction, what that looks like is while you're waiting for that 5-minute candle to close above the first 15-minute candle high. Now I'm showing this on the 1-minute time frame so that you can see it and visualize it. So you're waiting for that 5-minute candle to close above the first 15-minute candle high. You see buyers stepping in, but then sellers come in and push price down. And then what happens is you see an indecision candle close with a long wick above it, showing that sellers came in aggressively. You can then watch to see if we see price continuously reject this 15-minute candle high, like this candle here is an example, and then you can look, take a trade towards the downside, targeting this first 15-minute candle low. Now, no strategy works 100% of the time, so that's why I decided to show this scenario, because sometimes while you're even waiting for step 2 to happen, where you're waiting for direction, the move could end up breaking down and it doesn't happen. You can either skip the trade, or if you're quick enough to be able to think on your feet and flip the switch, you can catch the move in the opposite direction. I'm still working on backtesting this strategy to see if it's a high win rate strategy and in what market conditions it can be implemented in. So I would update you all once I backtest it and I'm able to identify the conditions and the high win rate it has, or maybe it just doesn't have a high enough win rate and it's not worth trading. So that's it for this video. Thank you so much for watching. I'll see you on the next one.